from Secrets, the channel for learning about trading and investing. Welcome to Stockpicks for next coming few weeks, and 6 swing trading opportunities are there for you. And this is all momentum, and we're going to do technical chart based analysis. Right? Let's get on the list. The first one is persistent systems. It's an IT stock. Let's look at that. So this is a weekly charts that we're seeing. Right? So look at the plain charts of the weekly. You can see that there is a rounding pattern that is formed beautifully. The trade was on much earlier at this stage, but that's okay. You can always take the trade at the break also. So here, rounding pattern, the level is 498485. Right? 4985 is the point where the breakout happens. Right now, there is some indecisiveness, right? And you don't have to enter it now. If the breakout happens above this 4985 zone and closes above that, that's the point where you have to make the entry on the weekly charts. Entry has to be on the hourly or daily, lower time frames. But we are talking, to get a beef, we're taking a higher time frames. These are swing trades that may be held on for 1 week, 2 weeks max. That's all. And it has tight stop loss, right? So the stop loss for this persistent systems. So first of all, why this trade is being taken is because one thing is there's a price action which is at an all-time high level, the rounding pattern, and there is a possibility that a breakout can happen. And it's a multi-year, so it's from to the last year the big rounding curve has happened, and it's an IT stock. And the reason is that the momentum had a divergence, it's negated now, and it has beautifully been above the RSI 60 in the bullish zones, and the trend indicator ADX is also rising up on the bullish zones. So both the trend and the momentum on the medium term and the shorter time frames both looks fine. It has got momentum and trend, and the price action also is in favor, provided we have a breakout that happens about it, a breakout zone. So there is a chance that it can break out and then it becomes a fake out and then it reverses back. There is a chance that it can give substantial moves up and then it can take a pullback. There is a reason that there is a possibility that it doesn't happen and it faces resistance here and then reverses. All these possibilities are there, but we would enter the trade only if there is a confirmed green close above the all-time high or the rounding pattern breakouts. Only then. Until then, we just wait and we don't take trades. This trade pick is a stock which is not yet ready to take. If a signal comes on it, we'll take, otherwise we won't. That's why we have 6 of them. Either one of them, 2 of them, 3 of them would definitely give a signal, and that's it. The stop loss would be the low of a candle, right, where the breakout is confirmed, the lower price, right, and that's a stop loss. And if it gets stopped down, absolutely no problem. Take it, and again wait for another opportunity for the price to again break out. You just have to wait how much of weeks or days that it takes, but that's how it is, right? So we know the reasons and we know the stop losses where it has to be kept in. Now the targets can be trailed. It's an all-time high, you never know. So one way would be to put in a Fibonacci extension and then check out the targets, right? So what do you basically do is from the lower swing to the higher swing and then retrace back and then look at it. This is a 38, and so what that would mean is you can look at targets of above 50, 60 for sure. So 5 to 100, then you can trail it from there. So that's how you find targets the all-time high. Use the Fibonacci extensions. Stop loss is very clear. Whatever we are entering, whether you stop out or not, that week's candle is low. Get out of it. You may get stopped out multiple times, but eventually if it breaks out. Now, the primary reason why this stock is picked is the volume. Look at this. The volumes have been increasing and it is beautiful, big, double the average volumes that you are seeing there. Somebody big is buying out there, this stock. Right? So it can move substantially up, and targets as we said, like or how I said, and stop loss as we said, like I said. The reasons why this trade is taken is also known, and when not to enter, when to get out, and how long to wait. All these things are clear. So that's persistent system. Next one is the M&M. That's Mahindra and Mahindra. It's auto stock. Look at the weekly charts. You can see the rounding backward breakout. It already happened weeks and months back, and then it consolidated in a rectangular smart pattern, and it has broken out. And this week today, it has given a small pullback. That's an opportunity, but a breakout is confirmed already with a green close above the rectangular pattern. Momentum. I'm talking about the volumes are good. I'm talking about the reasons why I'm taking. The price pattern is beautiful. A breakout, consolidation, another breakout, and it has given a pullback also. That is good, right? Stop loss is very clear. Entry candle, the previous week's candle is low, and and entry can be at a time. It's ready for entry. Exit is what I was talking about. The previous candle is low. Reason is that the momentum is in the bullish zones. After making a range shift, it is flying high. Small pullback is coming today. The ADX indicator also, trend indicator also is bullish. Volumes above moving average last week. So I think there is a small momentum divergence you have to be careful about. But we have always the stop losses, right? We will get out. How much to go again? It's how much to target is depending. The only way of finding that when the all-time high is taken out, the only way is to use the Fibonacci and your trail accordingly. But look for 1 is to 1.5, 1 is to 1 is to 2, 1 is to 2.5, 1 is to 3, like that. You have to trail it at the levels where the Fibonacci extension may be giving resistances on the upside. Right. One thing that you would be cautious about this is there is a divergence which could play out in the weekly. Entries as we always on. So my auto sector itself is doing very good, and so this should give a very good opportunity on the upside. Moving ahead, the third one, that's Mahindra and Mahindra Financial Services. There is a reason for that also. It's Mahindra This is a little tough to pick up this particular one. There is some reason the NSE one is not coming properly. Yes, here we have. This is again Mahindra and Mahindra Finance, MMFC. It's a rounding pattern. It's an ascending wedge breakout. Breakout is confirmed with the green candle, and levels of resistance would be the previous resistance zones, which is marked here, which is 294, 327. Likewise, entry is ready for entry, and exit has to be slightly below the neckline from where the breakout happened. Volumes are less, that's a worry. So put tight stop losses, you may get stopped out, no props. Happy losses. Reason for taking in its momentum and trend is bullish, and it's in the bullish zones and rising up. Right? So don't go for more than 1 is to 2. RiskReward, it's a max you can trade. Try for 1 is to 1.5. RiskReward, and then trade from there. So that's a financial services Stockpicks swing trade, momentum trade opportunity. It's a breakout trade. Breakout is confirmed. So that's the third one. Now we have Polycap. That's the fourth one. Polycap India. Again, it's a breakout confirmed. It's a rectangular consolidation that lasted for almost 1.5 years or something, and the breakout is confirmed with the green candle, and then it's the right time to enter. Volume seems to be good above the moving average. Trend is good, momentum is good above all in the bullish zones, and Stop loss has to be at the previous week's candle, 30th Jan week's candle low, and entry has to be it's ready to take the entries, right? So that's polycap. It seems to be electrical appliances. It's electrical wiring and appliances. Its competitor would be Havels and V-Guard and all that, right? So polycap is the fourth picks, and fifth one Siemens. Right? Why is Siemens picked up? So Siemens is showing a beautiful rectangle box pattern breakout. This looks like the famous trading strategy. Box strategy is what is known as. That's exactly what is happening. It consolidates, breaks out, moves up, consolidates, breaks out. So this is a zone where it's consolidating and breaking out. Right time to enter. Moving average above volumes, momentum bullish, and trend also in the bull zones. They are my positive zones as per the ADX indicator, and everything looks fine. So weekly charts is what you're seeing. It's a breakout. Right, top loss has to be given at 2885 or the previous week's candle low, and the entry right on. We can take the entry anytime. So that's same in India now. And the last one, ITC. Last one, ITC, the FMCG stock. The sector is performing good. Look at this beautiful rounding pattern, multi-year rounding pattern breakout that happened months back and consolidated and then pulled back and took support of the neckline and then broken out ferociously. Volumes above average, also trend indicator and moment indicator are in the bullish zones, and this is a position as well as a swing trade opportunity. Beautiful. So neckline of that breakout, famous breakout near the 325 would be the stop loss, and that's again the law of the breakout candles low, and entry can be right on. If you get an additional pullback, there will be the right opportunity. But since a substantial big move has happened the previous week, it may consolidate for a little bit. That may be opportunity for it to enter. And volumes, price action, price patterns, momentum trend, everything looks fine on the medium and the long. So swing trades again. So that's a wrap up. That's a 6 stock picks. Subscribe if you're not subscribed, and always remember this is for educational purpose. That's why we have done this chart study. These are not stock recommendations. Position sizing has to be as per your capital. Risk management is clearly defined. It is predefined risk. Stop losses are a must. Even if you carry forward overnight or day trade or whatever you do, manage your risk, and you're trading at your own risk. And these are only for litigation purposes at this point. Subscribe and watch out for more from this channel on different stocks in the coming days. Thanks for watching. Happy trading. Happy investing. Bye.